So Dogecoin and the entire crypto market went back in the red again today. Let's see what happened and if and when Doge will go up from here. As you can see here, Doge fell by more than 5% today, and this happened because of several reasons. Dow also tumbled by 1,000 points and the Nasdaq lost 5%, marking the worst trading day for stocks since 2020. The widespread weakness comes as traders have had more time to digest the recent half-point interest rate hike by the Federal Reserve, which is the largest hike since 2000 and was done in an attempt to corral record-high inflation. According to Michael van de Poppe, the zone that defines bulls and bears is a close above or below $37,500. Van de Poppe said that, "I'm assuming we'll test 39,000 again as there's a big gap in between." And then Rect Capital posted a chart identifying $38,400 as the new resistance level for bulls. Rect Capital said that, "Wouldn't be surprised to see volatility around red throughout May. Monthly close above red is what's most important to confirm a reclaim of red as support." And then data on how Bitcoin whales have been behaving during the recent market volatility was discussed by WhaleMap, which suggested that the previous whale inflows at 46.5K were serving as an accurate resistance and a temporary midterm top for Bitcoin's range. WhaleMap said that, "Now a similar resistance has appeared at 44.3K due to a similar-sized whale wallet. This should be our midterm resistance if BTC gets there." One of the reasons for the crash was the incredible rise in the volume of calls. According to data from the Social Trends feature shared on May 5 by Santiment, the volume of calls in this area is the highest since early February. Their post also said that, "Crypto traders appear to believe that yesterday's market-wide price surge was an anomaly and the short celebration won't last. Historically, when calls for selling spikes, crowd FUD like this strengthens the case of a continued rise." Another reason was that Bitcoin Netflow has observed a sharp negative value recently. If you don't know, the All Exchanges Netflow is an indicator that measures the net amount of Bitcoin entering or exiting wallets of all centralized exchanges. The metric's value is simply calculated by taking the difference between the exchange inflows and the exchange outflows. When the value of the net flow is positive, it means a net amount of coins is moving into exchanges as inflows overwhelm the outflows. As you can see in this graph, the Bitcoin net flow observed a large negative value just a couple of days back. This red spike amounted to around 13.7K BTC, leaving exchange wallets in one day. Another reason is that the market has seen a large outflow of institutional cash in recent weeks, and that has added FUD among retail investors. According to CoinShares' latest figures, the total amount of money that has flown out of the market owing to institutional investor withdrawals in a month is over $339 million. Despite the fact that the market saw a similar movement at the start of the year, the study indicated that this one had not overturned it. The sum was roughly $467 million at the start of the year, indicating a $128 million difference. According to the report, Bitcoin funds accounted for the majority of the recorded withdrawals. Since a whopping $133 million was seen in June last year, this figure reflects the greatest outflows from the Bitcoin fund in a week. Now let's talk about Bitcoin's options volume and purpose ETF holding. The thing is that metrics that can give insights into what deep-pocketed investment firms are doing in the crypto space might prove reliable during uncertain times. This is because such firms have access to the best analysts and are networked well enough to secure information before the rest of the market. The option volume metric registered a strong dip on 29 April and Bitcoin sold heavily the next day. It currently reveals that Bitcoin options volumes grew from 199 million on 30 April to almost 560 million by 3 May. The Purpose ETF holdings has been increasing from its lowest monthly point at almost 30K Bitcoin on 18 April to around 31.5K on 3 May. The increase in the BTC options volume, as well as Purpose ETF additional BTC purchases, are a sign of interest in the market at lower price levels. Also, based on a statement report from the Buy Bitcoin Worldwide portal, the current situation of BTC is quite alarming. The Buy Bitcoin Worldwide portal said that Bitcoin's historical volatility is at 18-month lows. The forecasted value in the last 60 days has dropped to 2.62%. It is important to note that Bitcoin volatility entirely affects the fluctuation of the price in a day. For experienced users and investors, checking on the volatility helps them estimate Bitcoin's price, as the Bitcoin Volatility Index shows Bitcoin fluctuations that directly reflect its price. In July 2021, Bitcoin's volatility was at its peak, and records have it that the volatility was twice as it is currently. However, after resting at 37,400, it has been in the recovery process. Another important thing we need to talk about is the reserve risk. In 2022, reserve risk decreased below 0.002 for the first time in the beginning of January. The current bottom of 35K was reached later that month. If a bottom has not yet been reached, it would mean that 5 months have passed since reserve risk first decreased below 0.002, and as a result, it would be the longest time it took for Bitcoin to reach a bottom after such a cross occurred. This just implies that it is highly likely that a bottom has been reached. If you don't know, the reserve risk is a cyclical BTC on-chain indicator that measures the confidence of long-term holders relative to the current asset price. When confidence is high but the price is low, reserve risk gives low values. These times have historically offered the best risk-to-reward ratios. Throughout the price history of BTC, every single market cycle top has been reached while reserve risk provided a reading above 0.02. Conversely, every single bottom has been reached below 0.002. Now let's move on to some news for crypto adoption. According to a new Bloomberg report, Coinbase put up an undisclosed amount of Bitcoin while getting a loan from Goldman Sachs. Now, this is a milestone event toward taking crypto mainstream with traditional institutions. While the Bloomberg report does not go into specific dollar or Bitcoin amounts within the Goldman Sachs loan, it does disclose that at the end of 2021, Coinbase's overall crypto asset holdings exceeded $500 million. Moving on, Binance said that it will invest $500 million into Twitter alongside billionaire Elon Musk, who purchased the social media platform for $44 billion last week. Binance also believes the acquisition will accelerate the adoption rate of crypto assets and blockchain technologies. The CEO of Binance said that, "We're excited to be able to help Elon realize a new vision for Twitter. We hope to be able to play a role in bringing social media and Web 3.0 together and broadening the use and adoption of crypto and blockchain technology." Moving on, let's look at some incredible news for Dogecoin. More and more Brits are buying crypto, according to a Coinbase research piece carried out by Qualtrics. The key takeaways indicate that 33% of British people own crypto, up from 29% in October 2021. Also, 61% of those surveyed intend to increase their holdings over the next 12 months. The Coinbase report also highlighted that 34% of UK consumers that were surveyed own Dogecoin. Also, luxury clothing designer brand Gucci announced that it will soon begin accepting Dogecoin payments in its retail stores. This comes with the brand's new move to accept crypto payments in its retail stores. Crypto payments are said to be rolled out later this month across various retail stores, but this will only be available at a select few stores in the beginning. The first stores to begin accepting payments in these cryptocurrencies include Wooster Street in New York, Rodeo Drive in Los Angeles, Miami Design District, Phipps Plaza in Atlanta, and the Shops at Crystals in Las Vegas. All crypto payments will be made using a QR code or an NFC reader that will be available at the point-of-sale terminals in these stores. Customers will be able to pay for items they purchase using their smartphone, and the payments made can be converted to fiat currency instantly or be kept in the cryptocurrency in which they were paid. So I think this is a major step toward the global adoption of Dogecoin. Now there's some really interesting data for Dogecoin. So data indicates that public trust in Dogecoin has continued to decline over the last few months, but that hasn't stopped U.S. consumers from buying. According to a study from business intelligence firm Morning Consult, trust in crypto among the general U.S. public is net negative. This means that among those aware of cryptocurrency, more people do not trust it than those that are. The study finds that people now trust Doge less than they did in January. Doge saw an 8% decline in trust, which fell to minus 44 percentage points in April. Trust in Bitcoin dropped 6% to minus 32 percentage points. Meanwhile, Ethereum lost the most amount of public trust, falling 14% to a net trust reading of minus 26 this month. The point is that despite the trend of declining trust, consumers haven't been dissuaded from investing in Dogecoin. A quarter of adults surveyed still plan to purchase cryptocurrency next month. This figure is only down 2% since January. Among these likely purchasers, only 21% say they trust cryptocurrency, a lot, while 57% trust it a bit. But the remaining 21% admit they don't trust Dogecoin but plan to buy it anyway. So there you have it. People trust Doge, and even when they don't, they would want to invest in it. And I think this is a really good sign for what's to come for Doge in the coming months.